Hi, good day everyone. Welcome to our video recorded lessons on fundamentals of accountancy, business and management 1. Today, we are going to discuss on steps 5 and 6 of the accounting cycle, which is to prepare adjusting entries and prepare the adjusted trial balance. To start with, let us have step number 5, which is preparing adjusting entries. After the trial balance has been prepared, we now move on to preparing adjusting entries. As defined, adjusting entries are made in order to split mixed accounts to bring the accounts up to date. The division will be made to identify whether which part is current and which part is for future periods. It affects both the nominal and real accounts. In accounting, as per generally accepted accounting principle, accrual basis is used instead of cash basis. As previously discussed, in cash basis of accounting, revenue is recorded and expense is recognized when paid in cash, while in accrual basis, revenue is recognized when earned and expense recognized when incurred. Because of this assumption, adjusting entries are needed in order to have a fair and reliable measurement of financial position and financial performance. The following are items that normally require adjusting entries according to values in 2017 are the following. Inventories, okay? So ending inventory, debit in the inventory ending, and credit income summary or cost of sales, which we have to discuss this on our next module or in our next weekly discussion because this entails inventory entails merchandising business. So we have to discuss this further as we go along our topic. Next, we have doubtful accounts. Doubtful accounts or the contra-valuation account for accounts receivable. So doubtful account, say for instance, uh, if your account receivable amounting to 10,000 pesos and you think that 2,000 is you doubt or you're in doubt that 2,000 pesos of your 10,000 peso account receivable is uh, considered uncollectible, or meaning there is no chance for you to collect the 2,000 pesos. That's why you have to set up a doubtful accounts expense of the same amount, and of course you credit it to allowance for doubtful accounts. By the way, there's a typographical error. This should have been on the debit side, same with the depreciation expense. Okay, anyway, to proceed, depreciation, it is a contra-valuation account for PPEs. Okay, contra-valuation account for PPEs, property, plant, equipment, except for land, because land is the only PPE which does not depreciate. So depreciation, when we set up depreciation, we debit depreciation expense and we credit accumulated depreciation. So meaning to say, if our building cost 10,000 at the time of acquisition, and after 10, perhaps 10 years is the useful life, then after 10 years, the value of that building should have been zeroed out. Meaning to say, the building has been fully depreciated. That's why we set up depreciation accounts. Okay, next we have prepaid expense. I think I have discussed this in the previous lessons. Prepaid expense, we have two methods, asset method and expense method. So for asset method, we debit expense, then credit the prepaid expense. But for expense method, we debit prepaid expense instead, and then credit the expense account. Okay, for the accrued expenses, we debit the expense account and credit the accrued expenses. For the deferred income, under the liability method, we debit income, credit income, and then for the income method, we debit income and credit the deferred income. And lastly, we have accrued income. This is an income earned but not yet received, therefore considered as an asset. So we debit accrued income, we credit the income. So these actually are the seven items that normally require adjusting entries. So again, we have in the ending inventory, the doubtful accounts, depreciation, prepaid expenses, accrued expenses, deferred income, and accrued income. Now, recall one periodical transaction on April 20, 2020. It was mentioned that he paid 10,000 pesos for rent starting June. It is important to consider that this payment is a prepaid expense since one was not able to use his rental space as of April 20. He is yet to start his operations on June 1, therefore the prepaid rent expense shall expire on June 30 accordingly. Therefore, the following are the should be journal entries respectively. Now, I just copy the same general journal sheet found on the previous lesson. However, for transaction number 3, if you could recall, our debit here is actually rent expense of 10,000 pesos and not prepaid rent. So accordingly, on the problem, this should have been prepaid rent. Why? Because we have paid 10,000 on April 20, but we have not yet consumed the rent, or we have not yet enjoyed the rent service or the rent which is amounting to 10,000 pesos. That's why on April 2020, we have to record a debit of prepaid rent of 10,000 pesos instead of prepaid expense. Okay? I hope it's clear. Now, on the general ledger also, we have to post the prepaid rent to its corresponding ledger 122. Okay? The ledger 122 or the prepaid rent, this should be debited with 10,000 pesos and not for the prepaid expense. Okay? So ideally, this debit entry should be posted to our ledger 122 rather for the prepaid rent and not on the ledger of prepaid expense. So that is actually the major difference of our discussion from the previous lessons and to our discussion today, because we have to clearly define what prepayments are and what expenses are. So for this example of Juan P. Rodriguez, we were wrong in recording it as an automatic expense because it should have been recorded as a prepaid rent. Okay? So ideally, accordingly, the unadjusted trial balance shall be presented as follows. So you could actually see, or as flash on the screen, you have their prepaid rent. Now recall on the previous lesson that we had, this was actually not prepaid rent but rent expense. Okay? Accordingly, the unadjusted trial balance shall be presented as follows. So we have here our unadjusted trial balance. Now, if you could recall, our second account here is prepaid expense and not prepaid rent. So ideally, since again, to reiterate, the rent has not been expired yet because you have not consumed the rent, so we have to record it under prepaid rent. And take note that if you could still recall again, the balance or our previous balance was also 532,000 pesos. So this is where the counterbalancing error happens. Diba? If you could recall, again, to reiterate, the balance that we had was 532. But our account now in the second account is not prepaid rent but prepaid expense. So this is where your counting balancing error occurs. So that's why we do adjusting entries. We adjust because or we have to carefully look at the different transactions during the journalizing and posting phase, because there are times that we might interpret the data wrongly, or we might interpret the problem or transaction wrongly. Okay? Same with this example. Instead of prepaid rent, we actually debited into prepaid expense. However, the same amount of debit and credit is being totaled, or meaning to say, 10,000 was added to debit, but then it was added to the wrong account. So that 532,000 for our previous discussion is actually wrong. Okay? Actually wrong because it should have been 532,000 with 10,000 peso debit, which is debited to prepaid rent and not to prepaid expense. Okay. Accordingly, prepaid rent expense should be adjusted at the end of June since the rent has already expired or used up. So, on April 20, we record prepaid rent. However, on June 30, since we already have expired or we already have used up the rent, therefore it no longer should be falling under the asset section. It shall now be recorded as an expense since the prepayment has already expired. Therefore, on June 30, 2020, the adjusting entry for prepaid rent should be as follows. Debit, rent expense, credit, prepaid rent. Okay? So this is where our adjusting entries would occur. Okay? So on June 30, we have to record the expiration of our prepaid rent. Why? Because we have to adjust our balances to its true balance. Since we already have used up the rent on June 30, therefore, we have to record rent expense debit 10,000 and credit prepaid rent. So our prepaid rent now becomes 0 because we have to post this to our ledger. So we debit rent expense to ledger 502, and then we also credit prepaid rent to ledger 122. So notice the net effect. On April 20, there is a prepaid rent of 10,000. However, we have used up already the rent on June 30 for 10,000. That's why the prepaid rent becomes zero already. Zero, our prepaid rent has been zeroed out because we already have consumed the rent for that corresponding month, which is for the month of June. Okay, I hope it's clear. Now, again, the rent expense has been set up. The 502 ledger for rent expense has been set up for 10,000 on the debit side. Now, ensure all accounts have been adjusted properly to guarantee its true balances at the end of the accounting period. For this case, only the prepaid rent should be adjusted. Therefore, we proceed to our next accounting step, which is preparing adjusted trial balance. Let us further assume that the business continued to operate until the last day of December 2020. It must be noted that at year-end, since it is the end of the accounting period, the computer equipment's value has to be adjusted because of depreciation. Again, recall, all PPEs are subject to depreciation except for land. Furthermore, one believes that the estimated useful life for the said equipment is 3 years. So it's actually the discretion of the management or the owner as to the estimation of the useful life of its fixed assets. For Juan Rodriguez, he actually expected that the useful life for the said equipment, which is the computer, is at 3 years. Estimated useful life is the estimated lifespan of a fixed asset during which it can be expected to be useful to its operations. Meaning to say, one believes that the computer set is good for 3 years. After 3 years, it should be condemned, or they could actually sell it at a lower price. But then again, the value at the end of the life should actually be zeroed out. If he believes that at the end of year 3, say for instance at year 3, he wanted to sell it from 20,000 from each computer, he wanted to sell it at 1,000 peso. The 1,000 peso actually is the salvage value. Okay, you will know more of that as you go along, or as when you proceed to accounting in college or in the university already. But for now, the very essence or the very concept of this one is that at the end of year 3, the value should be 0 pesos already. Meaning to say, it has fully depreciated. Okay. Accordingly, this is used in the computation for fixed assets depreciation. The formula is as follows. Depreciation expense is equal to the cost minus residual value over useful life. Example, if the cost of the computer set is 20,000, and you believe that at the end of year 3, the residual value is 0. Residual value meaning to say, you expect that the value at year 2, after year 3 is 0 already. So, there is no residual value. However, if you plan or if you expect that at year 3 there is a residual value of 2,000 pesos or a salvage value of 2,000 pesos, of which at the end of year 3 you could actually sell it at 2,000 pesos. Okay? So 20,000 minus 2,000 all over the useful life. So that would be 20 minus 2, 18,000 divided by 3 years. So you get a depreciation expense of 6,000 per year. That is just an example, okay? However, if you do not expect or if you do not make an estimation for the residual value, therefore your residual value is 0. Therefore, your cost of 20,000 pesos is automatically divided by the useful life, which is 3 years. So that would be 20 over 3. That becomes 6,666 pesos of depreciation per year. Okay? Now, cost is the equivalent amount of the asset at the time of purchase. So, meaning to say, when you purchase a PPE and equipment, when you purchase it at 10,000, therefore that is considered as the cost. The residual value is the estimated value of a fixed asset at the end of its useful life. Meaning to say, again, to reiterate as discussed previously, when you estimate it at the end of year 3, you believe that this computer equipment has a value of 3,000 pesos or 2,000 pesos, and that is your residual value. Accordingly, in the computation of depreciation expense, you have to deduct the residual value from the cost to be able to get the exact depreciation expense. Okay? Again, the computation of depreciation expense, you have to deduct the residual value from the cost to get the true depreciation expense, because if you would not deduct the residual value, you would not be able to get the exact depreciation expense for that current year. Okay, for example, the depreciation for computer equipment is 3 years. Okay, so we all know that there are 10 sets of computers. Okay, and then 10 times 20,000, you get 200,000 pesos. Okay, how much then is the annual depreciation for a computer? So we have here 20,000 pesos divided by 3 years, because we believe, or Juan Rodriguez believes, that there is no residual value for the computers, meaning to say at the end of year 3 the value is already zero. Therefore, the annual depreciation is 66,666.67 pesos. Okay. Therefore, for 2020 depreciation expense, the annual depreciation expense is 66,666.66. However, you have to prorate it because you purchased the computer set not on January 1 but at the middle of the year. If I'm not mistaken, you were able to purchase the computer set at the middle of the year. Okay? Let's try to check the date when it was purchased. Okay? Let's go to the April 15. April 15, you purchased the computer equipment, so you have to count the remaining months. Okay, so April 15, we have 15 days, so that is considered zero point 0.5. So we have May, June, July, August, September, October, November, December. So we have 8.5 months remaining for that year. That's why you should not claim, or you should not record the whole amount of the depreciation for that year, which is 66,666.66 pesos, because you only have to record a portion of that 1 year, which is equivalent only to 8.5 over 12. Meaning to say, for the 12 months, you only record depreciation expense for 8 months and 8 months and a half, or 8 months and 15 days. Okay? So to prorate it, the annual depreciation for 2020 depreciation expense, you have to multiply it by 8.5 months all over 12, because in 1 year there are 12 months. Therefore, the depreciation expense for 2020 is 47,222.22. Okay? So I hope it's clear. In finding the depreciation for the current year, one important consideration is the time period the asset has been in the company's possession from the date of purchase. So this is what I said. Since you purchased it, you acquired it on April 15 and not on January 1. So you have to prorate it based on the number of periods that you were able to use your asset. For one's case, he purchased the 10 sets of computer equipment on April 15. Therefore, it is reasonably estimated that from April 15 to December 31, depreciation expense is at 47,222.22 as computed above. The journal entry for the depreciation shall be as follows. Debit, depreciation expense. This is how you set up your adjusting entry for depreciation. Debit, depreciation expense. Credit, accumulated depreciation for computer equipment. Take note that when recording accumulated depreciation, you should record it to the account which corresponds to your depreciation expense. If it's for computer equipment, that is for computer equipment. If the depreciation is for the building, then you have to record the depreciation to its corresponding account of accumulated depreciation for building. So different PPEs, different fixed assets have different accumulated depreciation accounts. Okay? So it's not mixed up. It's not consolidated for all PPEs. Okay? So again, to reiterate, you have to record it to its corresponding accumulated depreciation account. Okay. The depreciation expense for 2020 is at 47,222.22, but for the next year in 2021, you have to claim, or you have to record the whole depreciation, because you already have started in January 1 rather until December 31. And for the third year, in 2022, you still record the same 66,666.67. However, on 2023, you only have to record part of the 66,666.67. However, you have to prorate it at 3.5 over 12, because on April 15, 2023, your asset shall have a zero value already. That's why on the third year, or on not on the third year but part of the third year, which is on 2023 from January 1 to April 15, you record depreciation expense only for 3.5 all over 12 because 3.5 represents January, February, March until April 15 all over 12, which represents the months for the whole year. Now, accordingly, its prepaid ledger shall also be adjusted and the rent expense ledger shall be set up. Okay, so we have here accumulated depreciation, prepaid ledger because this refers to the prepaid account for the rent expense. Okay, so we have here accumulated depreciation, computer equipment, depreciation recorded, accumulated depreciation, so account number 561, and we also have depreciation expense, ledger 135, so debit here 47,222, and then the credit on the accumulated depreciation computer equipment ledger 561 with the corresponding amount of 47,222.22, and that is for the year end on December 31, 2020. So I hope it's clear. There are still a lot of examples for adjusting entries, but for the purpose of our discussion now, I only have discussed on prepayments and depreciation, how to record depreciation and prepayments, because these usually are the usual examples on when to adjust our entries. Okay, so let's now proceed to step 6. So how do we prepare our adjusted trial balance? So if you have recalled, or if you were able to recall our discussion from the previous lesson, our step 4 is preparing unadjusted trial balance. Now, in step 6, after we have prepared our adjusting entries, we have to make again our trial balance, but this time it should be adjusted, meaning to say we already have considered our adjusting entries. Okay, so adjusting trial balance or adjusted trial balance is prepared after adjusting entries have been made or accounts have been brought up to date. Have been brought up to date meaning to say you were able to adjust the accounts up to that certain date. For our instance, at the end of the year, December 31, 2020, we are actually trying to reflect the true amount of these accounts as of December 31, 2020. Okay? So for the cash, the same. We since we have not adjusted our cash accounts, computer equipment accounts to salary to expense accounts, what we adjusted are only the prepaid rent, the prepaid expense, the accumulated depreciation and depreciation expense. So you can see actually here flash on the screen computer equipment 20,000, and you already added accumulated depreciation of computer equipment for 47,222.22 centavos under the credit side. Okay, so simple. From our ledger, we have here accumulated depreciation of 47,222. That's why we also have to record it in our adjusted trial balance at 47,222.22. Then accounts payable 200,000, Rodriguez Capital same 300,000, service revenue the same at 32,000 pesos. However, for our depreciation expense, we already have again 47,222.22, which is a debit on this account. Now, based on our ledger 5, 135 rather depreciation expense, we have debited the amount of 47,222.22. So actually, we have recorded depreciation of our computer equipment for 47,222.22. And then, as you notice, we have here our rent expense. The prepaid rent has already been expired, diba? So we already have rent expense of 10,000 pesos here. And then copy the salaries expense down to utilities expense. Therefore, our adjusted trial balance is debit 579,222.22 and a credit balance of 579,222.22. So we are now updated with our balance as of December 31, 2020. Okay, notice that the prepaid rent account has been eliminated already after adjusting entries were made. So that is the very essence of adjusting entries. We have to update the balances of our account to bring the true balance at the end of the accounting period. So that's it for this week. I hope you learned something from the adjusting entries and the preparation of our adjusted trial balance. Next week, we will be discussing on the preparation of financial statements, and I hope you were able to learn a lot today. And see you next week and stay safe.